You're watching news headlines on mining.com. Rio Tinto's new chief executive, Simon Trott, is moving fast. He's outlined a plan to raise $5 to $6 billion through asset sales and productivity gains as he reshapes the miner. Trott wants Rio focused on iron ore, copper, aluminum and lithium. He plans to shed non-core units including titanium dioxide and borates. He's also paused spending on projects such as bioiron in Serbia's Jadar lithium mine. Those cuts are expected to generate major savings. Rio has lifted its copper outlook on stronger output from Mongolia's Oyu Tolgoi with a long-term target of 1 million tons a year by 2030. China's top uranium producers surged more than threefold on its Shenzhen debut, underscoring Beijing's push to secure nuclear fuel. China National Uranium raised 4 billion yuan to develop new mines as the country races to expand its reactor fleet, now the largest under construction worldwide. The company still relies on imports for more than 70% of its fuel, even as global uranium prices climb on rising nuclear demand. Owned by China National Nuclear Corp, it posted 16% profit growth last year and controls Namibia's Rossing mine. Norway has frozen all deep-sea mining licenses until 2029 after the government reached a budget deal with the opposition. The move reverses last year's plan to open 386 offshore blocks for exploration in a bid to secure rare earths and battery metals. At least 2 companies had applied for licenses, though mining was unlikely before 2030. The pause lands as the United States accelerates its own seabed mining plans, with the metals company seeking major permits in the Pacific. Debate remains intense. Supporters point to growing mineral needs. Critics warn of serious risks to seabed ecosystems. Glencore says it will lift annual copper output to roughly 1.6 million tons by 2035 as it works to rebound from years of declining production. CEO Gary Nagle told investors the miner expects to top 1 million tons by 2028, even though output remains 40% below 2018 levels. Glencore is cutting 1,000 jobs and aiming for $1 billion in savings after production setbacks and investor pressure. The company has trimmed its 2026 copper guidance following challenges at Chile's Collahuasi mine, but it remained or reaffirmed long-term growth plans, including a 2026 restart at Argentina's Alumbrera operation. Copper has broken past $11,400 a ton after a jump in withdrawals from London Metal Exchange warehouses. Prices later eased towards $11,100, but the metal remains up more than 30% this year. Traders warn inventories are approaching critical lows as shipments stream into the United States ahead of possible tariffs. Producers are charging record premiums in Europe and Asia as buyers compete for supply. Analysts say tightening conditions could spark a deeper global squeeze early next year. And that's where we leave your news headlines for now.